Hi friends, I'm Santosh. Welcome back to my channel. Today is a very important session, okay? Because we'll discuss about candlesticks and about technicals, why they work and how they work, and that is very important, very important. This is the most basic or the foundation or the cornerstone on which we are going to create a monument or a mansion, okay? Now let's start. Now, this Japanese candlesticks pattern we can study very neatly from these trading view charts. Those are which I often use, and ZERODHA charts are also good, and DHAN charts are also up to the mark. This ZERODHA, if you haven't opened an account, you can open an account using the link given in the description of this video. And the DHAN broker also, you can open an account. This is a free account. You can open. It costs nothing and use the charts. Okay, now coming on to the technicals. These Japanese candlesticks are a part of the technicals. Why they work and why they fail. The thing is that just look at this. Suppose there are five people in a football ground. Okay, and a man comes with a AK-47 and starts firing. And there are only three outlets out of the football ground. Can you guess or can you speculate that which way the people will go? Okay, they may go from this side, they may go from this side, they may go from this side. This man is keeping on shooting in a very randomized fashion. Can you guess it? It's very difficult, isn't it? Okay, now we are still making it more difficult. Now there are bigger outlets, same five people. Can you guess where they will go? It's very difficult. Yes, I do agree, it's again very difficult. Now coming to the next scene. Now we have the same scenario, but you see, there are a hell lot of people in this football stadium. Okay, so many people. Now, same man is coming and shooting in a AK-47. Okay, now can you guess which side they will go? There are only three outlets. This side they won't go because they are in the line of the fire. So either they will go from this side or they will go out from this side, out of the football stadium to save their lives. Now, in the same way, these technicals work because there is a huge volume in certain stocks and commodities or currency trading. Wherever there is a big volume, you can speculate or predict the market to a reasonable degree, and that much is enough for us. Now, suppose there is a low volume, like I showed you the previous one. Okay, this one. Suppose you trade with some penny stocks and there is a very low volume. It's very difficult to predict which way the market will go. Okay, obviously it's very difficult. So first thing is that the technicals work only when there is a good volume. If you trade in Reliance stocks, if you trade in Bajaj Finance, ITC, any of the Nifty 50 or Nifty 100 stocks, you will get good volume. If you trade in the index, the Bank Nifty or the Nifty index, you will get good volume. In commodity market also, if you trade in crude oil or say natural gas, okay, or silver, you will get very good volumes. Okay, there the technicals will work. That means your speculation will work. For example, look at this. So many people are there are five outlets. It's basic common sense. Very less people will go out from the small violet, whereas the most of the people will prefer the green ones because they are bigger outlets, and hardly few will prefer this big outlets on the opposite side because they will be gunned down. And suppose we remove the outlets. Okay, the probability of using these two outlets will still be more. And if I still remove another outlet, one is in the line of fire and another is away from the fire, most of the people, or you can say almost all the people, will use this outlet. Suppose this is a sell order, this is a buy order, I will go with the buy side. Now that is moving with the trend. Okay, now coming to the chart. Okay, let me take you to the charts. Now, Reliance has shown a very good move today. So let's come to Reliance. Okay, now look at this. Look at this chart. Look, this is a trend line. Okay, I'm taking it out. We'll discuss all later. Now look at this. The stock has started today at a value of about 2380. Then it came down. Then it came down. Then here, reaching the lowest point, 2350, it did not come down and it went up. Suppose somebody who had invested here, okay, will get a very good benefit of 29 rupees, almost 1.25% gain in a hardly of matter of one hour. Okay. Now, if you see the volume, if I switch on volume here, okay, you see the volumes. Look at the volumes here, huge volumes. Okay, the volume traded is huge. You can see the candlesticks over here, or the barcodes over here, so big. Even here, very big. And also here, as the market started, if you see the volume, this peak was given by this bar candle, and it is showing huge volumes. Okay, so that is what want to make you understand. These technicals work whenever there is a good volume. If the volume is small, these technicals won't work. So you have to confirm the volume first. Now, as we'll discuss on candlesticks, this slide is very important. I'll try to make it as clear as possible, but try to, suppose you do not get it in the first go, try to see this candlesticks or this part of the video 2 or 3 times till it settles down, till you clearly understand it. Because you see, we'll be growing on, our knowledge will be growing on this. Okay. Now, as I had discussed in the previous videos, in the first and second videos, the green candlesticks symbolizes that the price is going up. You see the upwards arrow. And the red candlesticks bring the prices down. You see the downward arrow. So this is increasing. This is a bullish candle. Okay, this is a bearish candle. Bullish candle means it takes the price up. Now, this colored portion is called the body of the candle, same as here, body of the candle, the main part or the bulk of the candle, because the candle opens at this price. Okay, then what happens? This is called the wick of the candle or the shadow of the candle. Okay, the green one, you can see a thin line. This is called the wick or the shadow of the candle. Now, the candle opened here, but some bulls, some sellers sold so much that the price came down to here. But again, bulls gained control and took the price high to this. This is the highest mark. This is the highest price till the bulls were in control. Okay, but further they could not take the price up. The sellers came in and they brought the price down up till this mark. That means this is the closing price. Suppose this is a 5 minutes candle. This is the 0 minute. It went up, went up. Perhaps this is some 4 minutes or something, and till this is the close of the 5 minutes. Are you getting me? Suppose it is the 1 day candle. Then this is the start of the day, and it went up, went up, went up. The prices went up throughout the day, and towards the perhaps last 1 hour or last 2 hour, the price again descended down or decreased and closed over here at the closing mark. So this is the open, this is the closing, but during the day or during that time period when this candle was formed, the prices had gone to this low and this high. I think I am clear. Same case here. As you know, a red candle or a bearish candle starts from a high point and it takes the prices down. It opened here. When the prices opened here, perhaps the bulls fought back and they took the price to this high. But again, the bears came in or the sellers came in and they drove the price all the way to the bottom here. But the prices could not sustain because at such a low price, the buyers or the bulls become more interested and they began to buy at this low price. And so much they purchased that the candle closed at this price. Are you getting me? Again, I am repeating, the prices opened here, but the bulls took control initially and took the price to this highest point. After that, the sellers came in and drove the prices all the way down to this low. And again, the bulls came in and they took the prices above and closed it here. Now, please see this part of the candlesticks 2 or 3 times to make it clear. Otherwise, things will be difficult. And if you understand this slide properly, everything will go very easy and you understand everything very well. And this is the cornerstone of the market. You have to understand candlesticks. This is the foundation on which we will build our base. And I told you about the wicks. Wicks determines In a green candlesticks, the wick determines the bear power. The longer the wicks, the more powerful the bull were. So it is common sense. If there is no wick, such as this green candle, that means the bear power is zero. That means this candle is only this candle is only formed by the bulls, and this is a very strong bullish signal. This is called Marubozu candle or bullish Marubozu if it's a green color. In the same way, when a red candle has wicks, it symbolizes the bull power, how much power the bulls have. Though this is a red candle, but still the bull power is signified by the wicks or the shadow of the candle. Suppose a red candle has no wicks or no shadows, then it shows that this is a very, very strong bearish market. Here, the bears are in total control, no sign of bulls. Okay. Now, coming to the next slide, these are some slides we'll discuss, but this is called engulfing pattern. We'll discuss in detail, but just see them. This is morning star pattern. This is bullish pin bar. This is a type of doji candle. I'll discuss it in more details. This is called a bullish harami or inside candle. Harami in Japanese means pregnant. Okay. This is a bearish harami candle, or we can say this is an inside candle. Okay, you can mark just the reverse of the engulfing candle. This is bearish engulfing candle. This is a evening star. This is a bearish pin bar. Okay, just know the names. We'll discuss every candle in detail. Okay. Now, first coming to the hammer candle. Now, okay, these candles have very good names. Okay, very the names justifies their size and shapes. Where the but remember the important thing is that to understand what this candle is trying to tell us, to understand the real meaning of the candle, there will be no harm if you don't remember the name of the candle, but you should understand what is this candle telling us. What if there are two candles? What are they telling us? If there are three candles, what is the pattern telling us? If a pattern is formed by more candles and it is signifying something, it has a more meaning. Example, in a democracy, if two people go to vote, they have little value. One people even as a witness also less value. But if huge number of people give their view, it has some value. Okay. So in the same way, if a pattern is made by number of candlesticks, a large number of candlesticks, the more significant it is. And in the same way, if a candle is formed in the longer time frame, suppose one candle is formed in 1 month, that candle has more significance than a candle which is formed in a 5 minute time frame, because a candle which took 1 month or 1 day to make that took a lot of effort, lot of views, lot of buying and selling to make that candle. So a higher time frame candle has got more power than a lower time frame candle. For example, suppose in a joint family, a grandfather is there, then father is there, then the son is there, okay, then the grandson is there. Okay, the most active will be the grandson. You will be a kid doing all nonsense things. His father will be a little more mature. The son, his father will be more mature. Okay, and the grandfather will be supreme. Whatever the grandfather will tell, that will determine how the house will run. In the same way, if the higher time frames, if gives a signal, it is the main trend. The whatever the grandfather says, the father who is his son may not carry out his order for a small time, but eventually he has to do it or he has to quit the house. In the same way, in the higher time frame, whatever the candlestick gives the signal, that is the main signal. Then the other are bound to follow it. They might fluctuate for a little while, but after some time they will come to line. Okay. Now coming to the hammer candle, look, a hammer candle is looks like a hammer. It has a long tail and a short body, and the color doesn't matter. I'll show you in examples. The color doesn't matter. Look where and how it has formed. It has formed after a downtrend. This is a downtrend. The candles are there are more red candles, as you know, and you can see the price has started here and it has come down. Lowest point was here, but what happened? The bulls drove the prices to here and they formed a green candle, and after that the prices went down. Now coming to the charts, you can see here, as I told you, a hammer candle color doesn't matter. Look, the prices came here down and you can see a hammer candle green color and the prices went up. Here what happened again, the prices came down. Now here is another hammer candle. Okay, and after that, look, here is another hammer candle, it took the prices up. And here is also another hammer candle, a strong hammer, a very good. Just imagine, the prices came to here to the low of 42,100, then the bulls fought back and took the prices here, and look what a rally after that. Okay, and look, another thing, here the prices came down. Here another hammer candle was formed, but here it is a inverted hammer, not the regular hammer, but it did work in the same way. Okay, now look, why I showed you this example is that you should know that every candlesticks in its position it will work. Here a inverted hammer took the prices up because it was formed at the end of a downtrend. But here look, the inverted hammer is formed at the end of a uptrend, so it is just doing the opposite. Or if you try to understand it, what is exactly this hammer telling us? It told us that actually the bulls had initially driven the price, rising the price up to here. But what happens, the bull came in and they tried to decrease the price and they closed over here. That means the bulls could not drive the prices more. This is a very long way, and this shows a rejection of prices at higher value. Then what happened, the bulls were in control. After this candle was formed, excuse me, the prices went down and down. Okay, now see some example in the market. Now look at this. After a strong uptrend, there is a hammer, inverted hammer. This is also called a shooting star because, as you know, shooting star falls down with a long tail. This shows price rejection at higher prices, and this goes down. And look, this is not, the shape is not exactly as a hammer, but you know, you can get the idea. That uptrend started from here. Okay, and this is a pullback. This is a pullback. Again, the prices went on increasing, but this is somewhat different. Look, all this at this price, the price was rejected. Okay, and this is not a small body hammer, but it looks like a hammer. And look after that how the price came down. Okay, so I hope you understand what this hammer does and what a candlesticks, why the technicals work, and why we should trade stocks with good volume or index with good volume. And I'm giving you some work to do. Okay, you have to find hammer candles, both inverted and non-inverted, and you have to mark how they are working and when they are working, when they are not working. Okay, for that you can use uh, this trading view charts. Okay, you can directly type tradingview.com, and or you can install it in app in your Android mobile or Apple iPhone. Okay, and you can do this, you can see this chart. Or those who have opened an account in ZERODHA, okay, or DHAN, okay, then they can see that in ZERODHA app or DHAN app. And those who have not opened an account, please open an account. The link is there in the description of this video. And please like and subscribe this video if you find it interesting. It goes a long way in motivating me to make some more videos. Okay, thank, thank you. We'll meet again. Bye.